Is the S&P 500 crashing? Well, this is one of the million-dollar questions that every trader wants to know leading into this new year 2024. In today's video, I want to share with you what is the game plan for you to trade on the right side of this market for at least the first 3 months of the market. What are the key levels that you ought to watch out for, and which are the attractive stocks and sectors that we can pay attention to in order to kickstart our 2024 in a great fashion. Hi, my name is Jay from swimtrading.com. Welcome to today's video, and I will see you there. Let's talk about this market tonight. This is where, right, I think right at the start of the year, now you will be having this question. Jay, where does this market go? Is it going to continue to go up, or is it going to come down? Well, I have been saying this for many weeks already, and if you look at S&P 500 futures, which is on screen right now, or if I were to switch this over to the spot S&P 500, you will be able to see that for the spot S&P 500, I have been always, gunning the high of January 2022, and that was 2 years ago. The market made a high during January of 2022 before it crashed quite spectacularly in that sense. Now that we look back for the whole of 2022, and then 2023 was like a V-shaped recovery. What this market reminds me of, right, is that if I were to go back further in time, right, if I were to go back to sometime in 1975, if I were to go back to sometime in 1975 or 1980s, right, it really reminds me of that period. Now, what has it got to do with anything? Let me pull up trading economics. And if I were to look at the interest rate, right now it's at 5.5%, right? And if I were to pull up maximum, you can see that in the 1980s, okay, in the 1980s, before 80s, our rate hit 20%. So before 80s, it was 5%, and then it increased crazy high towards 20%. And it was during this period, okay? It was during this period. And if I were to overlay the charts over here, you can see very clearly this was what happened. So in anticipation, okay, in anticipation of the increases in interest rate from 1997 onwards, okay, in anticipation of that, what happened was that the market did a, how many percent is this? This is about a 20% draw, okay, a 20% draw from January of 1977 all the way to March of 1978. So this is pretty much, right, pretty much very similar to what we have in year 2022. Do y'all agree? If you agree, can you type agree in the chat? So in anticipation of the rates increase, therefore the market just went down, in knee-jerk reaction to it, and it actually resembles that of 2022. Yeah. And what happens after the low was that, oh, okay, I think the key interest rate is already out. The peak interest rate has already been announced. And thereafter, the market found a bottom and it rallied upwards from there. And then that's where you can see that, drawing from the experience, the market just went into a, it just went higher and higher. And as the market participants cope with the interest rate, being in a very high interest rate environment, then the prices starts to normalize as well as to pick up. So this is pretty much, right, what I'm seeing in resemblance to the market that we have for 2 years ago, 2022, and then last year, 2023, because the market came down in 2022, and then after that, in 2023, it just rebounded, right? And all of you are thinking, right, in 2024, where will this market go? Okay, when and where is this market going to go? Which leads me, right, to this. So as you can see, as the interest rate plateau, all right, it just increase and increase and increase and increase. It plateaus out around 17-18%, somewhere around there. So if you look at this plateauing effect, I know it's not like one proper straight line. There are cutting of rates, and then it raised back to the same rate, and then it cut, so etc. So now if we just look at this place, okay, this phase, the interest rate plateau actually leads to a knee-jerk reaction of a bullish movement, And then subsequently, towards the tail end of this market cycle or the business cycle, it went sideways for a long while before coming back down. And if you were to draw parallel, right, of what happened here in 1980 to what it is today, because today, 2024, where are we? We are at a situation where, you know, this is all on weekly chart, right? In anticipation of the increase, the market tanked. And then after that, oh, nearing the top, the market rallied, which was last year. And right now, it plateaus. And therefore, right, my overall bias, it is still bullish. Drawing parallel from what happened many cycles before in the 1980 cycles, in the early 2000 cycle, as well as 2007 cycle, 2019 cycle, each time when the interest rate plateaus, the knee-jerk reaction on the market is towards the bullish side. Does everyone concur? If you concur, can you just help me type bullish in the chat? Actually, just 15 seconds is damn good because I can take this time to go and drink. Hey, so far, is it laggy? Is everything okay? Is the software laggy or everything is good? Oh, okay, So where is the target eventually? The target, right, which I began last year with, was that starting of last year when the market was here, everyone was like bullish, bullish, don't buy. It's there are some online personalities as well on YouTube, right? Some of the highly followed personnel, they got 200,000-300,000 subscribers. Meanwhile, I only have a few hundred subscribers only. So they were saying, I'm not buying. I want to sell. It's a bear market. Everything is just going down and down. And I could vividly remember the few people that were bullish, right, was actually Alex, Adam obviously he's very bull as well. Then I was like, all the cards have been shown already. So definitely I think it's gonna be bullish. And to make that kind of call right at the start of January, which is exactly 1 year ago, is quite atrocious because if you were to look until January 2023, right, it is still a bullish, it's still a bearish market. And to say that, right, well, in hindsight now, the call turned out quite nicely. I said that we were going to end the year very close to the high, or if not slightly exceeding the high. All right. But what I didn't expect, right, was that this year was actually, they are slated for a rate cut this last year. And they have pushed that off to this year so that they can bring the core PCE towards their long-term target, which is also a good thing. And now that we have, some extra time to ride on this market movement, and this market, right, that rebounded in late October is one of the strongest rebound that we have seen in late as of late. So this is a plus, if I'm not wrong, a plus 16% move, if I remember correctly. So from the bottom to the high, right, it's about plus 16%. And it's just week after week, bullish, 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 without pulling back. So what has it landed us with now? As of now, right, I think in terms of the target, we are very close to breaking this high. I will not be surprised if this year, okay, give it about the first quarter one of 2024, I am still bullish. That's my bias, which we have established earlier. And I think that in terms of price target, I think it would break this high, which the market always does so. It always breaks the high just by that little bit. And then after that, yeah, you guys know what will happen, right? So that is the target I'm aiming for, somewhere from 4,800 to no more than 5,000. And I think this is easily reachable in quarter one 2024. Is everyone clear? If you are clear, type clear in the chat. Excellent. So with this in mind, right? With this in mind, what I'm going to look at from a technical point of view is that for quarter one, I am targeting somewhere around 4,008 to 5,000. And I'm giving myself about 3 months period, okay, the next 3 months to realize this target. But of course, it's not going to go into one straight line up lah. Okay, later I will drill into the detail whether is there a pullback, etc. But for now, right, this target, okay, this target is of interest to me because why? Or rather, this timeline is of interest to me because if you look at the Fed fund rate, we can see very clearly. Let's not project beyond quarter first half lah. All right, by end Jan Fed fund rate, right, they are looking to keep our interest rate stagnated, which is currently at 5.5. They are going to keep it at 5.5, high probability. Then March, they are looking to reverse minus 25 basis point. That's what they are likely, pricing in. So in March, right? Let me just write it down. In March is minus 25 basis point. Then for May, from 5.5 down to 5.25, and then now you can see overwhelming majority keeps it at either 5.25 or most of it, actually 60% is pricing in 5%, which means by May, right, they are cutting another 25 basis point. And finally, if we go to June, which is still in the first half, that's where for June, they are going to cut another 25 basis point. So it will bring the rate right from 5.5% right now to 4.75% target in June. And why am I establishing this? Because this is now the benchmark. And this benchmark, right, is just like where the goalpost is. For example, if you're taking a penalty shot, okay, atrocious drawing, pardon me. Then I'm going to draw a stick man with high hair and then a smiley face and two long hands. Okay, this is atrocious. But anyway, knowing the benchmark, it's about knowing where this you laugh at me, leh. My horrible drawing. Only I laugh at myself. So this benchmark, right? It's about how this goalpost is going to shift, like whether is it shifting right, whether is it shifting left, how much is it shifting by. So right now we have a yardstick, we have a benchmark that we are targeting, and by this first half, right? By this first half, what is going to happen? It's going to be, it gives us a time target. Okay, it gives us a real time target to know that, when the interest rate they are reversing. All right. So if I were to pull up the Fed fund rate again, many times before, I think I've shared with you before. After the plateau, after they start to reverse, which is the pivot, that's where the market will start to follow suit as well. After the pivot, they start to reverse, that's where the market will follow suit as well. So it has happened for many cycles beforehand already. So I am expecting the same to happen or similar things to happen this time. And therefore, knowing the timeline, number one. Number two, knowing what they are benchmarking up against, it let me know that it allows me to know that if they are changing this benchmark, then how should the market behave? Should it behave bullishly? Should it have a bullish reaction? Or should it have a bearish reaction? So the things I am looking out for is this concept called divergence. Can everyone type divergence for me in the chat, or just type letter D for me? Now, what is divergence? Divergence is that if, let's say, this is the benchmark, the benchmark is to cut interest rate. What happens if it doesn't cut? If it doesn't cut the interest rate, right? Now, the next thing I need you to think of is what is supposed to be the knee jerk, okay, the knee jerk reaction. So I'm helping you to put down the thoughts, to quantify your thoughts, and to give you a process. Think about this. Now you know the benchmark is supposed to cut. If it doesn't cut, what should be the knee-jerk reaction? Then that's the first part. The second part is that you need to watch for evidence. Does the market react in this way? Well, if it does, then okay lah. I mean, it's just performing in line to what I'm supposed to, what it's supposed to do. But if it doesn't, right, then guess what? Something weird. So it's just like, hey, if good news, market go down. Am I missing something? If it's bad news, market go up. Naturally, this divergence will lead me to ask myself, am I missing something? And this is one of the first few weeks that you are able to get out or get in way ahead before any technical indicators, before any any guru tell you that, oh, you can get in now. Most people will tell you, like, you will be very tempted to buy into Bitcoin and cryptocurrency right now. Yeah. Before Coinbase was at 180, now obviously pull back a little bit already. Before that, right, it was when it was double digit. Nobody in the right mind will go and buy Coinbase, right? Except the few who does lah. Yeah, I mean, you all know who they are, right? So most people have no interest in that, and now it's like 180. At the time when it was garnering attention, it was at 140, 150, 160, and I was like, well, I should have gone in. So that's the FOMO effect, right? So this divergence is actually one of the first few things that I spot for, and where in our analysis lens, right, in TASA, FA, and CA, right, where does this divergence fall into? It actually falls into sentiment analysis, SA. So do you follow? If all is good, can you help me type SA in the chat? Yeah. So right now, to give you a something like a summary, what do we have? We have the time target, which we are looking as early as Q2 this year. They are looking to unravel the interest rate. So I know that there is a time target to how long this bull market is going to be. Number two, all right, number two, I also know that since they are going to reverse and it coincides with the TA levels that I'm currently looking at what level should I then start to pick up the pick up the pieces lah, to write on where the overall bias is for this year. Okay, so now all clear? Good. So now we are done with macros, right? Let us head on over into the technical levels. All right, let me just cross this out. We head on into technical level. For technical levels wise, let me switch back this to daily. And I want to bring your attention to my right-hand side of screen. Right-hand side of screen over here, MMTW all the way to DIOF. All right, this 12 ticker symbol. What are these? These are market ref. Basically, MM is total market. So this is total market. S5 is S&P 500. So this is SPX. ND is NASDAQ. Then DI is Dow Jones lah. So most of the time, actually, you just look at total market is more than sufficient. But if you want to nitpick and as well as to push down into, what are the segments of the markets that are moving, then you just go down into S&P 500 or NASDAQ itself. So we can see here very, very clearly, is the market, although I am bullish, is the market going on a one straight line up? The answer is no. No market can go up in a one straight line up one, especially after this huge run from October onwards. It literally just pumped upwards and up and up. It just up, away and away. And if you recall, right, early December, what was the market breadth over here? The market breadth over here was around 70%, 70 to 75%. And then at 70, 75%, right, I think it did touch 80 before. And after that, right, it just stagnated, it just consolidated and went sideways before this last ounce of, run, just squeeze out from the market, and then the market just rally up from there. So looking at this market right now, is it extended? Well, look at the total market MMFI, 83% of the stocks are already, from a layman perspective, right, 83% of the stocks have already participated in this run that leads the market to pump it to where it is right now. If you look on the S&P 500, 91% of the stocks have already participated and responsible for where the prices are right now. Then on NASDAQ, if you look at NDF, right, 87% of the stocks have joined in. And then, of course, on Dow Jones, 90% of the stocks have joined in. So it's quite safe to say, right, as an aggregate, we are looking at least 85% of the stocks market has already joined in, regardless of whether they are big cap or what. So obviously, S&P 500, NASDAQ, all these are bigger companies, more established, bigger cap companies. So the big cap companies are definitely up there. Then the smaller cap companies, right, are slowly pushing up as well. Therefore, an aggregate of the total market, we can see 83% of the stocks are joining up on this run, which leaves us, right, with with just a roughly 17% more that can just push this market higher. So how much higher? Well, in the eventual target, all right, in the eventual target, obviously this is futures, but if I switch on over to the spot prices, you can see that we are very near. I'm expecting the market to exceed the previous high just by a little bit, maybe somewhere around the R1, R2 area, at least by Q1, all right, before the music stops. At least by Q1, I think it's very doable that we're going to hit R1 and R2 around that area moving forward. Now, as a form of support, where am I looking for? As a form of support, right, I will be looking for the low of December. Now, when is the low of December? Can everyone type LOD, low of December? Okay, low of December. Where is December? December is over here. And then where is the low? The low of December is actually somewhere around there. All right, let me just switch on over to this. And then if I zoom in, roughly around there, roughly around there. Okay, so low of December is somewhere there. And now, where is this market going to be? The low of December also coincides, right, with the consolidation that we see over here. And as you know by now, through your understanding of the structure as well as the TA that I've shared with you during your class, right, when the market is going sideways, this acts as a base, all right? This acts as a base for the market to launch itself forward, which it did in second half of December. And now it has actually did a false breakout. Now, you may be thinking, Jay, what are you talking about? What do you mean by false breakout? Well, as of right now, the market is going through minus 0.35%. Later, when the market opens, I think we are able to see that. So we have a high over here. This is a high. And then, obviously, there's the high. And then the market did break above the high. So that was a breakout. And after the breakout, right, it didn't have any follow through. There is no follow through. So in this case, NFT, no follow through, not non-fungible token, all right? No follow through. And the market starts to correct downwards. And it just leaves those people, right, that are buying the breakout, that have bought the breakout, they leave them what? They leave them high and dry. So in fact, they are trapped. So can everyone just type trap in the chat? So these traders that bought up there at the breakout, expecting this market to just keep going and going and going without paying attention to where this overall breadth is, what happens to them now? GG.com lah, they are trapped. And now that they are trapped, right, the first level for me to see whether there is a rebound, right, the first level for me to see that, it will be somewhere around the pivot area. It will be somewhere around the pivot area where we are doing stop hunting. All right, so does all this term comes back already? Familiar, right? You all know what level to do the stop hunting? Yes? If you know where to do the stop hunting, can you just help me type SH in the chat? Can you just help me type this in the chat while I drink my water? Good. So that's the first level that I'm aiming for, which is somewhere around the pivot. The actual level, I think all of you should know lah. All of you should know. So this is where, right, stop hunting level will be the first level of support that I'm looking at, which is somewhere around the pivot area. All right, somewhere around the pivot area. And the eventual support that I think will hold will be this LOD, which is the low of December, my dotted line over here. This should be the support area for January 2024. And this pullback, right, from where it is actually not very deep. From where it was right at the high, if I were to pull back over here, it's about a 5% pullback. Now, in the grand scheme of things, right, where does this 5% comes into play? If I were just to show you, oops, sorry, typo. If I just were to show you this moving average simple, right, let me just change this to 20. And then let me change this to 50. Just using a simple 20-50 moving average. You will be able to see that the LOD, right, actually pulls back closer towards the 50 days moving average. Now, what is the significance or impact of this 50 days moving average? In a not so deep market pullback, all right, in a bullish market and a not so deep market pullback, most of the time, right, the prices will find itself, going towards the 50 days moving average and obviously yo-yo around it. There'll be some form of reaction like a self-fulfilling prophecy because there are just so many people looking at the 50 days moving average. So just to give you an idea, if you're looking at 2020, 2021, right, a lot of the pullback that has been around 5 to 6%, right, they have just pulled back and touched the 50 days moving average. Around the 50 days moving average again and again and again and again and again and again. All right. And then finally again and again and before 2022 happened. So using back what we know, when prices start to run a lot higher, which last week, right, or the last live session I mentioned that this run resembles that of what we had in July 2023. And when the prices run so far away, well, if you just draw parallel from what happened about 6 months ago, right, it's pretty much very, very similar. You have a high, you have a price that breaks the high, and then after that, this was very high breadth as well. How many of you remember this? That during that period in time, the breadth ratios was also very high. Not as high as 90, but they were around their 80s. How many of you remember this? I did it in the live sessions with y'all. If you remember this, can you type me in the chats? So whatever that we are seeing now is not new. It is pretty much quite similar as well, right? There was a high, and then there was a break of that high, and then now the market breadth, the conditions were exactly the same, or rather, I would say high similarity lah. So very high breadth as well. And what happened after that? The market just went on a 2-3 months drop lah, that wipes out the whole run from June onwards. So over here, right, what are the anchor? The TA wise, I'm looking at LOD, low of December, and of course, the first level will be some form of stop hunting, which I think this time because of this valiant run, the stop hunting should not hold. So don't go and do stop hunting. All right, don't immediately do stop hunting over here. If the market does base around here, then start to go back up, that's a different story. I am not expecting like a V-shaped touch SH and then after that it goes up. I'm not expecting this. This one, can all of you acknowledge this by typing clear? Okay, this one you must be clear. I am not expecting a V-shaped touch and go kind of stop hunting. If anything, if it can, base around there, then okay, maybe there is some hope that that's holding. But as far as I'm concerned, I think the market is going to hold above the low of December, which also coincides with the previous high of July. So that's the area that I'm gunning for. And the price is 4550 thereabouts. Okay, 4550. Can everyone type 4550 in the chat? Okay, good. So now with this overview of the market, what have we known so far? Number one, we know the time target. The time target is end of quarter one or slash Q2 lah, of 2024. That's where they will start to cut the rates. That's where I think we will be a lot closer to that tipping point. That's number one, the time target. In terms of the price target, it is to break the high of January 2022. So I have the time target, I have the price target, and right now, because of similar conditions that we saw before, I am expecting this market to pull back. Pull back to where? Pull back to two levels. Number one, the SH over here, which is the stop hunt level. You know the exact price point for it. I already taught you in your program. Number two, it is somewhere closer towards the 50 days moving average, which is also the LOD area, the low of December area. So should this low of December, right, which is a minus 5% drop, if it didn't manage to hold, then it must be the goalpost. Remember my ugly stick man and the goalpost that I draw just now? Okay, remember this? The goalpost must have shifted again. So in this year, right, where there are expectations to be laid out, I'm expecting a year of greater volatility, maybe that something that resembles 2022 because of the changing perspective, changing goalposts that we have. Because in 2022, everyone was like, the goalposts keep shifting, later say 3.75, later say 4%, later say 4.5%, and then at the end of the day, it really hits for 4.5%. So now as they are cutting, right, there will also be this same expectation and flipping of opinion where 25, 25, 25, later 25, 50, 25, then how? So all this, we have to take them into account. So what I've just done together with you, right, is to lay out all the factors that I am concerned with for the next 3-4 months. I've also laid out the price level that I'm looking at, the time target I'm looking at, and the possible scenarios for where the prices may find some of a support.